Order filled.
I am so hungry right now. I've never been this hungry in my entire life. Every single day, I enjoy the process. I want to become better. There's nothing holding me back anymore. Everything happens for a reason. It's crazy. I don't even care about this food anymore. Maybe it's just because I started traveling lately and it opened my eyes, and it really did. Like, I really see what the world has to offer, what kind of life that people live. Like, I'm so hungry. Every single day I wake up and I know what to do. I know exactly what to do. Like a few years ago, I was just juggling side hustle, didn't really know what to really pick. But now I have like two things that I'm really, really passionate about. And I just know that this is what I'm gonna do for the rest of my life. They literally put like skin from my thigh right there, and they put it on my foot. I really got nerve, bruh. But they can't stop me. They can't stop me. Nobody can stop me. I really don't care how long this journey is gonna take me, but I'm all for it. I'm really all for it. I don't care. Because I know at the end, I will get there. I just trust the process. This just needed to happen. I stay on my path and everything happens for a reason. Everything happens because it's laid out in front of me. And I keep making mistakes. I keep just having a nice winning streak and then just blowing it all away because I had a loss and I go on tilt. I still have that. But every single time, it teaches me something that makes me want to change a little bit about my decision making, about my trading plan, how I go into life. I don't know, it just always happens for a reason. I always look back and like, oh, but that really learned me something, even though it's the mistake I made over and over again. And the thing that will now keep me from making more and more mistakes, because obviously I can't keep making those. I learn a lot, but it's got to be enough at some point, right? So the main thing that I'm struggling with is my perfectionism. Like, my view of the world doesn't align with the view of trading, which is a common thing, right? Because if you lose in life, like if you lose a quiz, then you're actually dumb. But if you lose a trade, then you're not dumb. It's part of the process, right? You can't be perfect all the time. Like, you have to lose sometimes. I'm just so bad at this, and people know, like, my psychology is really the worst. I can read price, trust me. I have my trading system. It's been freaking downloaded over 2,000 times. It has 50 plus K views on YouTube. Obviously, it means that I actually know how to trade, right? It's just, if I am the person that's still gonna not follow my plan to the T, if I'm still gonna not follow my rules, obviously I'm not gonna make it. It's simple as that. And I guarantee you, if I take a beginner trader with very good psychology, teach them my system, they will be so better off than me right now. Because I can have a crazy way of viewing the markets, I can time the market perfectly, but if I keep making those small errors, which small errors is literally all it is at the end, it's correcting the small errors to then finally turn your break-even curve, like I'm in right now, to like a curve like that. So it's really just a perfectionism, which you can't have in trading. You can't be perfect. I have to accept that my system is not the holy grail. It's just me applying it consistently. That is the holy grail. What is the difference? If I think that my system is the holy grail, then every single price movement, I'm gonna think, oh, it's because of my system. No, I should just execute my system, and I know more times than not, I will end up green. That's it. But if I'm gonna be like, oh, my system didn't play out, so I'm gonna tilt, I'm gonna take another overtrade because what is this? Like, that's exactly why I'm still not consistently profitable. So it's really just the perfectionism that I need to switch. I need to understand that I just need to execute my system and my system only. Don't care about a loss, I go on, no tilt, because I know next time will maybe be a win or a loss, it doesn't matter, but at the end, I will be profitable. Stick that in my mind, come on. I also just have a lack of discipline when I'm actually on the charts. Like, I'm someone that wants to do a lot of stuff. Like, I don't only trade, like I do a lot of stuff, and I just have too many things that I want to do in life that are in my head constantly. And when I journal, when I actually backtest, and I'm so locked in, but for some reason when I'm on the charts, I'm glued to it and I'm thinking about making money. And that's the worst thing, right? That's the worst thing. It's like I forget everything I should do. I'm becoming better and better though. Like, it's been amazing growth, but still, I still have that feeling like, oh, why not just hop in this trade? Because it's gonna make me extra money. Whereas your only focus should be to, does this follow my system? Is this a good decision? Yes, take the trade. No, don't be looking at the charts with your eyes squeezed. Oh, where is my setup? If you already need to do that, then you don't have a setup. right? That's something I realized. I'm like looking, this is a setup or not? No, it's not a setup. If it's like screaming at you, like, yo, this is the trade. Like, you know the difference, right? I have so many examples where I just take a trade because it's forced, and I know it. I already know before and when I'm in the trade that it's not a good trade. Those are the ones that you need to cut out. But there are some trades where you enter, and before and after, and while you're in the trade, you just know this is a good trade. If I lose, I won't be too mad about it. But it's only if you take the bad setups and then you lose, then I'll go till. Also, I realized I just need to clean up my trading system. It's a very good trading system, but it's cluttered as fuck. And it's good. In the beginning of the year, when I made the system, it looked perfect to me because it's just the first time I made the system. But the more you trade, the more you realize that some parts of your trading system you don't actually use. Like I was trying to write so many things like, oh, you can also do order block entry, you can also do this entry, and you can also use this trading correlation. I just realized what I actually use right now every single day, what I look for, what gets me the best setups. Those confluences, now I've refined my strategy. I didn't change it. I just literally deleted things I don't use anymore. And this is really gonna help me just to put clarity and just use this as the actual foundation of how I trade. I already had it, but it was like kind of too much nuance, too much ambiguity, which I still like. I still like having discretion in trading, but it's better to have like a mechanical foundation and then be discretionary on top of that. I don't write TGIF on my plan. I don't write like that. If I need a gap entry, it needs to be discount. Like you already know that stuff. Like it's like base stuff. So I'm not gonna make my system cluttered with all those basic stuff that you know is higher probability. So you need to make sure everything checks, but then you have the decision to still take the trade or not, right? That's what I mean. And now with the system I have, I cleaned some things up. I made sure I write some things better to understand it better. Now I really have like, whoa, this is my holy grail. If I follow this, it's gonna be crazy. Now I know exactly what to look for, and it feels so good. It's so clear now. I have my system now. It's something I also recommend, like have your system in front of you when you're trading, and just constantly when new candles print, okay, 1, 2, 3, 4, 5, 6, 7, all your steps of your trading plan. What's my bias right now? Can I find a setup? Is there an entry, a confirmation? Let's go. I just have such a peace of mind now because I know exactly what to look for. It's right in front of me. I just need to execute it, build good habits, and not fuck up. So yeah, let's go over it. So this is basically like the refined system of this video here. You can literally download this system for free. Already more than 2,155 people did this. And I'm gonna also include this new version that I'm showing you guys right here. So let's start from the top here. I'm showing up from 9 a.m. EST to trade the index futures triad. This is when I decide to hop on the charts. I have 30 minutes to prepare. The market opens, then I trade. Now, if there's pre-market news like NFP, unemployment claims, or there's like PM news like FOMC, then I just make sure I'm 30 minutes before that. So that's that. Now, first step of my system, how I start to define my bias when I open the charts. These are the things I keep in mind always. There's 4 reasons why markets move. This didn't change. This is still something that is just crucial for me. First of all, I think this is something that a lot of people agree with. The market, it hunts liquidity. Now, my types of liquidity, which I find the best is, first of all, low resistance liquidity, SMT, equal highs or equal lows, PSPs, data highs or data lows, or clean highs, clean lows. Low resistance liquidity, LRR, is just like if you're trading a market maker sell model, you usually want to see like a very nice trend line liquidity on the left side to target, right? Same thing, but like this, if you're trading market maker buy models. So that is low resistance liquidity. Next to this, we have SMT. Why do I find this a good liquidity pool? Well, because it's actually also just low resistance liquidity. Most of these things here are, because if you think about it, like let's say you have a daily bullish sequential SMT. We are bullish, but now we have a bearish one that's confirmed. I'm gonna go to the confirmation later, but stick with me here. Bullish one, bearish one. If we have the bearish one, my bullish one will get invalidated if the bearish one is confirmed, right? So then I can use that SMT as a liquidity pool. And it doesn't need to be sequential SMT, just SMT, because if there's SMT, there's one asset that at least makes a failure swing. And if you have a failure swing, it's always looking like lowers its liquidity most of the times, right? Now here, equal highs, equal lows, that makes sense, right? PSPs, same thing. Actually, a PSP on a higher time frame, on the lower time frame, is just lowers its liquidity because it's a cracking correlation. And same thing, they just become liquidity because the other side of the market opposes this side. Let's say you have a monthly bullish sequential SMT with an hour 4 PSP. You had the exact same thing a week ago on the bearish side. Now, this bullish PSP is gonna target that bearish one. This is what's called the magneto effect in quarterly theory. Now, next to this, I also like to use data highs and data lows. What is this? Let's say 9:30 open, we have a nice big wick. Unemployment claims, we have a big wick, NFP, FOMC. Whenever you see like a clean wick made at news or at the open, it's just really nice to use as liquidity. Just backtest this. It's just really common that we take that high or low out at the end with a nice setup. Now here, I also write down clean highs. And with clean highs, I just mean like there's no SMT there. There's no reason for the market to reverse there. It's literally like a high. There's no stop rate. It's only this high, and the next highs are like all the way to the bottom of it. A clean high is how I like to call it, and most people do. But I just like to use it as liquidity because I know, oh, there's no reason for the market to reverse here. If I see a setup then I like to target that high because it's not like an invalidation. There's no PSP, there's no crack, there's no context. It's not tapping in a gap. It's just a random clean high. Those are nice liquidity pools. So after knowing this, that the market moves to hunt liquidity, this is always what you have to have in mind. If a low gets taken out, look for the highs. If a high gets taken out, look for the lows. Obviously, this is just one of the things, right? This is just one step of my trading system. Don't trade this. But after this, you also need to understand that the market rebalances to equilibrium at all times. It rebalances to inefficiencies at all times. And these two, they go hand in hand because usually when you go to equilibrium, you also fill a gap. But it's better to see both. Then also the market moves to generate liquidity. It always generates liquidity. The market rules based on AMD. Accumulation, manipulation, distribution. That's literally how the markets move. Also keep in mind every single day. Now these four things is the first step towards forming your bias. So I just look where we are in price and I just go over these things. Oh, are we now inside a gap? Are we now in equilibrium? Okay, then we might now take out liquidity. Oh, but first we need to generate liquidity to then manipulate and go to the liquidity, right? And let's say we took out the liquidity. Now it's maybe time to rebalance to equilibrium, to rebalance to inefficiency. So I go on all the time frames, 4 hour, 1 hour, 50 minutes, 5 minutes, 1 minute, and I just form my first sort of bias using these core concepts. Now, next step, I need to recognize the higher time frame draw and the lower time frame draw. And these two, they basically go hand in hand because if you understand that the market is built up from models inside models, and with a model, I mean a market maker model, it just helps so much finding your place in the market if you understand that every single stuff is a market maker model within another market maker model, within another market maker model, and so on and so on. So knowing this, you look at the 1 minute. This is usually what I use to trade. I'm a scalper. I would like to be in 5 minutes, 10 minutes, maybe 1 hour max. Maybe I take sometimes a 5 minute entry, then it's gonna be like a session trade. But all that a market maker model is literally just accumulation, manipulation, distribution, AMD, and all these concepts here in my trading system, they all refer back to this in a way. So that's why it's so important to understand that this is like what rules the market. And I've shown this right here. I think at the end we'll go there, but I basically say like everything comes down to AMD that rules the market. Just something that you got to keep in mind. And every single concept here basically refers to that because a market maker model does exactly that. It also generates liquidity. Let's say a market maker buy model, it generates liquidity to the way down. Then that's also like the accumulation actually in a way of buy side liquidity. Then we have some kind of manipulation. Then we have a crack, which I'm gonna go over right now. And then boom, we distribute, right? And then if you take out the high of the market maker model, you can still go for runners. And those runners, they will lead to the high of the overarching market maker buy model in question. So recognize the lower time frame draw, your low hanging fruit, and recognize the higher time frame draw. This just speaks for itself. Just find your higher time frame draw that's like aligned with your lower time frame draw. Or not, you can also use your lower time frame draw to trade back inside the range, take profits there, and then know that your bias is bullish and take out the highs, for example. I don't recommend beginners to trade like two sides of the market in one session, but you have to keep that in mind, right? We always need to go to discount, premium, rebalance to equilibrium before we actually go to the higher time frame draw, right? And that lower time frame draw may then be in the opposite direction. I'm pretty sure you guys get what I mean, right? For these two, I just basically look for lowest liquidity, SMT, highest lows, equal highs, equal lows. And now I'm gonna refine my bias by monitoring the cracks. Cracks is from quarterly theory. This is what I use to really like conform my bias. This is basically like ICT, I got this from Justin Warline, but this is really like quarterly theory. I look for the cracks on the monthly, weekly, daily, 90, and micro cycles. And I basically look for only these stuff. I know there's a lot more, but it comes down to this only if you really want to lock in. SSMT, PSPs, and SMT fill. If you just look for, okay, at what side of the market we have the biggest confirmed cracks, and I'm gonna go over how I make sure I confirm my cracks, but let's just focus on this. I monitor every cycle and I look for, okay, where are the biggest confirmed cracks? Let's say we have a monthly bullish, nothing on the bear side. We also have a daily bullish, a 90-minute bullish. We don't really have anything on the highs, then my bias is gonna be leading towards taking longs, right? And I need them to be confirmed, and we're gonna go over it later. But basically, I look for those cracks on every single cycle and I focus on trading in the direction of the biggest confirmed cracks. There's a footnote here. Basically what this means is I can also trade against the biggest confirmed cracks if there is clear context and a cracks combo. And this might sound weird, but I'm gonna get over that later. So basically, I look for all these cracks on the monthly cycle. I check for monthly sequential SMT, for hour 4 PSPs, for hour 4 SMT fills. Then I go to the weekly cycle. I check for weekly cycle sequential SMTs, which are confirmed. I check then for SMT fills on the weekly. I check for PSPs on the weekly, all the way down to the micro cycle. So that's how I further refine my bias. Now I need a lot more stuff before I can actually take a trade. But basically, after this, I need to look for a crack combo. I have 5 different crack combos that I like to use that I just see work a lot of the times. Whenever there's a reversal, there's a trade, usually those combos are in place. First of all, and this is kind of ranked from best to worst, you have a higher time frame sequential SMT plus a lower time frame sequential SMT. You have a SSMT plus a PSP. You have a SSMT in a gap. I also really like to use this one. This is one I came up with, really works. A lot of the times when you have like a reversal, I see like a lot of times an SMT fill and a PSP on the same time frame. And lastly, we have a higher time frame sequential SMT plus a turtle soup of lower time frame sequential SMT. This is basically like the smart money reversal of my lower time frame market maker model that I'm trading. I want to see one of these happening at the smart money reversal or on the way down. Like if we already had the smart money reversal and we didn't hit low hanging fruit yet, then we can still maybe look for a trade. And we also keep in mind all of this. It needs to be in line and some other stuff as well. Just 2 things. First, the smart money reversal is below the true session open for longs and above for shorts. You don't need to enter a long below the true session open or enter short above true session open. The smart money reversal, like the cracks, like the actual reversal, just need to have that characteristic. So that's it. And lastly, time and price aligns, which means time in relation to the model. So basically, I look at the structure of price. Do we actually look ready? Did we already build up enough liquidity? Did we already go to discount? And this all refers back, like every single thing of the system, it all connects, right? But this is what I mean with time in relation to the model. I learned this from Justin Warline, and this just really makes sense to me. You need to wait for price, for the structure of price. I'm not talking about time here. I'm just talking about time in relation to the model, to the market maker model. So if you, for example, have just like this, I'm not gonna take a trade, right? I really need to wait for like clean generation of liquidity, then a clean cracking correlation. We tap discount, we do whatever, we tap equilibrium, we tap a gap, then we have a clear displacement, and now I'm sure time in relation to the model is ready. The structure is ready. You know what I mean? It just needs to look clean. That's basically it. It needs to be a clean market maker model, and you don't want to hop in too early. Now, then I also need my trade to be around red folder news, the New York Open, or in a macro window. Red folder news can be anything, just red folder news on Forex Factory. New York Open is 9:30, and a macro window is just for me 50 minutes before the close of the hour and 50 minutes after. The reason why this works is not because, oh, it's the window, it's just because hourly candles and 4-hour candles open there, especially at 9, 10, 11 a.m. Really good macros, and usually a lot of volatility is there, so you can take everything as a higher probability. Just like red folder news and New York Open, it's technically a news event as well, New York Open, because I mean, the market opens. So everything that happens there, I treat as a higher probability. That's why I'm not trading Asia session, not even London session. Like if I'm trading the New York session, I need to trade NQ, right? News can either do three things, in my opinion. It can distribute price or it can manipulate price. If there's no cracks in correlations before the news, before the New York Open, then I don't really think that the market will just expand like this. It will create the manipulation. It will create the crack. The crack is the manipulation. It's the same thing actually. Now, if there are cracks before some type of news event or the open, then I expect that news to distribute towards my drawn liquidity. Get what I mean? So after that, everything is basically ready. I now know how the markets move. I take that into account with my bias. I recognize my draw on liquidity, lower time frame as well as higher time frame. I know that the market is based off market maker models, and I basically look for trading a market maker buy or sell model on my lower time frame draw. Then I refine my bias by looking for the cracks. This is how I basically determine reversals if they're in line with the narrative. I look for the cracks. What side of the market, bullish or bearish, has the biggest confirmed cracks? And I'm going to talk about confirmed right here, but stick with me here. I have all of this. I have a crack combo, and now also time and price alliance, and the smart reversal is below trusted open for longs and above for shorts. Now there's a confirmation. Confirmation for me, when a crack is confirmed, and I'm usually just talking about sequential SMT here because there's really no trade where I don't have like a sequential SMT. Basically, I need to see a displacement creating an inverse fair value gap or a clean turtle soup using open, high, low, close. Let's first talk about this. This is not the same thing. I have two confirmation techniques. People use inverse fair value gaps, people use order blocks, people use CISD. I use a displacement, creating an inverse fair value gap, which is, it makes sense, right? I need price to see displacing on the time frame of my lower time frame crack. So if I have a higher time frame SMT plus lower time frame SMT combo, I need it to see happening right there. Also right here, right there, right there, right there, right there. On the last thing of these combos, basically. I don't need the higher time frame to be confirmed already because then I might already be too late in the trade, right? The lower time frame crack basically activates the higher time frame one. So that is that. I need to see displacement on that lower time frame crack, creating an inverse fair value gap. So let's say I have a daily bullish sequential SMT. Then I want preferably to see like a 50-minute bearish fair value gap to be inversed with the displacement. Then to me, order flow changes. This makes sense. The crack is confirmed. It aligns with my context, with my narrative. Confirmed, right? I use it as confirmed. Now, sometimes if I wait for that, I might be already too late for the low-hanging fruit, for my session liquidity. So sometimes when the setup looks so clear, I like to use a clean turtle soup using open, high, low, close. What does this mean? It just means, for example, we have a super clean 90-minute bullish sequential SMT aligned with my narrative, aligned with everything with my system. And the 5 minutes just has like a super clean sweep of like the previous 90-minute quarter. And everything aligns. Like it's not like a 90-minute sequential SMT where it looks like we can still go lower. Like it's literally like a clear manipulation. And we close the candle with a very big wick on the bottom if I'm trying to look for longs. So yeah, all needs to be on the cycle time frame of the lower time frame crack. Alignment is found right there. Then I need to make sure that the setup looks dumb clear. This is the last step. I can already press the button to buy or sell, to take the trade, but I'm not gonna do that before I read this, before I tell myself, oh, does this setup actually looks dumb clear? It can follow all of this, right? But you can still have some discretion. I like having discretion in trading. Sometimes there's some other factors that you don't want to take the trade, and it's completely fine because at the end, all that matters is you just having conviction in the trade, because then you're going to be confident. You're not going to care about getting stopped out. You're just going to move on. Then this is very easy. This is just my entry. I just market enter after I have that clean turtle soup right on the candle close. Here after the displacement right on the candle close. This just means confirmation. So market after this confirmation, or I wait for a limit at the gap of that lower time frame crack time frame, or I wait for a SMT fill with a displacement. Maybe when I'm not really confident yet, I want to wait for more to be more convicted in my bias. I'm not really sure. It doesn't look dumb clear yet. Then I can maybe wait for a SMT fill or also like a precision gap, something I don't put on the system because it's basically the same as a PSP as well. If you watch my last video, you know what it is. I put my stop loss at the high or low of the lower time frame crack. If I use SMT fill, I want to see like, let's say a 5-minute SMT fill, I want to see like a 5-minute displacement from that. And then I put my stop at the SMT fill low where it tapped the gap, right? Not really the invalidation. It's best to always put your stop loss at the higher low of the lower time frame crack. I've been getting teased a lot lately, and if you put your stop there, you're most of the times good. So yeah, then full TP at your low-hanging fruit. Your low-hanging fruit is basically just your lower time frame draw, the market maker model on the lower time frame that you're trading. I really don't like runners because I'm too greedy. I realize I'm too greedy. I can't let it run towards a crazy external high or low. But sometimes there is like some really close, clean, higher time frame draw, I like to call it. What this is basically just some liquidity on the higher time frame that's pretty close to my lower time frame draw. So if there is that close, clean, higher time frame draw, I can use it as my second TP, and I basically make sure that I take 50% off at your low-hanging fruit of your market maker model that you're trading. And then basically you trail your stop aggressively, but still logically. Like you just trail it aggressively so you don't like lose all your profits. You just make sure it's at least at break even at that point when you have your low-hanging fruit that hits. Now, after that, you monitor the trade. This is very important. I can still switch my bias even mid-trade because every single candle, you need to think about it, prints new information. That's why I really believe in monitoring your trade, monitoring the markets. Every single time that new information prints on your chart, you need to go back to your system and always repeat these things. What makes most sense now? Is it good that I'm still in this short? Is it good that I'm still in this long? This makes sense to me. That's why I use it. I monitor my trade, and if I see that opposing confirmed cracks and context is bigger, or when a retracement is likely to happen, then I close the trade. Now this one is the easy one. You know most likely when a retracement is going to happen, right? When we first take out like that clean high on the way towards your actual TP. Because you know that price can retrace, and you really don't want to be in a position where you could have taken profit, but price retraced harsh, is back at break even, back in drawdown, whereas you could have just closed your trade and maybe even look at a re-entry after the retracement, right? So that's why I really like to just take it off after I think retracement is likely to happen. If I see that the market is going really fast up or down, like it's going to my TP, then I'm not expecting a retracement. But if there's like some lower time frame cracks, some important high gets taken out, whatever, we fill in a gap, we can expect retracement, the new hour candle opens, whatever. That's market experience. Close position, if the opposing confirmed cracks and context is bigger, this is the first one. So basically, let's say you have a daily plus micro confirmed by the micro with the 1-minute displacement, but then you go higher and we have a daily bearish that is already confirmed with a 50-minute displacement. And then you have the micro that is now opposing that micro bullish with your bullish setup. So now obviously the bearish cracks now make more sense. And let's say we are just tapping above the true open and we tap a premium gap, then now the context also is way bigger bearish side, right? So my whole system is basically just comparing the confirmed cracks and context and making sure that you trade in line with that. And this is tricky. You can still trade against the cracks if it makes sense context-wise. If you, for example, need to retrace to discount premium and we are not ready to make the actual move of the session yet, then we can just take trades based on concept. But it's always better to make them aligned because then you're aligning with the whole market, with the whole session, with the whole move of what the session has to offer. Okay, also very important, a crack is confirmed after a displacement or a clean turtle soup. But as you might know, I already can trade a higher time frame sequential SMT if the lower time frame crack is confirmed. This just needs to be confirmed, because if I wait for this to be confirmed, then I'm already too late, right? I'm just anticipating setups, right? And I only need the lower time frame crack to be confirmed. So yeah, whatever cracks are most confirmed on all cycles and where is the biggest context pointing towards. And with context, I mean all of this of my trading system. The reasons why markets move, this here, higher time frame and lower time frame draw, true opens, and time and price. That's basically everything except the cracks here. Now, some last footnotes here. I didn't mention one. Basically, right here, when I wrote down, this is the first step towards forming your bias, like these 4 reasons why markets move. I put a note here saying the triad assets, so I'm trading the futures triad, so I'm trading NQ, ES, and YM and comparing them against each other. And basically, how I look at them is they support each other. So if one asset does something, I don't need the other asset to see do the same. So referring to this, it basically means if NQ already rebalances to equilibrium, I don't need to see ES doing the same. If YM already rebalances to the premium gap, then I don't need to see NQ or ES do the same. And this also, if you take it to the next level, this basically means it's SMT fill, right? Because one asset fills the gap and the other one does not. Yeah, so basically they all support each other, and this is just how I understand the market. Like these assets are correlated, and ideally what you want to see is one asset like taking out the high while the other one does not and taps a gap. Now we have the one asset hunting for liquidity. Now we have the other asset rebalancing the equilibrium. We form an SMT. I hope this makes sense. I'm just rambling my thoughts, but basically these assets, they support each other. And this is referring to this. So when one asset rebalances or generates liquidity or hunts liquidity, you don't need to see the other asset do the same, because if one asset hunts liquidity, then the other one is making a failure swing, and then it's SMT, and then market reverse, right? So also, this footnote refers to here. Smart money reversal is below transaction open for longs and above for shorts. Why? Because sometimes I take trades, longs for example, where NQ has not a smart money reversal below this. But if ES did this, if YM did this, they made the actual turtle soup of the SMT, then I don't need to see NQ do the same, because it made a failure swing. You get what I mean? So it just needs to be happening at one of the assets. That's what I mean with if one asset does something, you don't need to see the other assets do the same. Now here, this second footnote is from here. I focus on trading in the direction of the biggest confirmed cracks, because then if context, what I mean with context is all of the rest besides cracks. If context and cracks align, then it's always the high probability setup, because you align everything, right? But you can also trade against the biggest confirmed cracks. Let's say there's a big daily bearish, monthly bearish, but we're so hard in discount and we expect price to rebalance to inefficiency. We're generating liquidity on the highs a little bit towards those gaps and equilibrium. A lot of liquidity to hunt. We have some nice draw then. And we have some cracks. A crack combo is below transaction open. Then I can still trade longs, even though the biggest confirmed cracks are bearish all the way on top. But it just needs to make sense context-wise, if you get what I mean. I'm just saying you don't need to necessarily trade in the direction of the biggest confirmed cracks. That's what I say, focus. You need to focus on it, but you can still take setups against it if it makes sense context-wise. But you still need to have all of this, right? Still go over your system, everything needs to be in check. This is all the context. So yeah, context is here's where markets move, higher time frame, low time frame draw, true opens, end time, and price. Obviously, there's a lot of more that I know about trading and stuff, but it just doesn't make sense to put on here. If I see all of these things happening, I decide if it's dumb clear or not. Now, for risk management, I realized evals, I need to put more risk on it. Right now, I'm literally just treating my evals as like a funnel account. Like I'm literally risking like $100, $200, whereas my profit target is like 5K on one of my challenges. So it's gonna take a while and it doesn't really help with my psychology. I should just like take only dumb clear setups, because I realized when I'm trading low risk, I'm taking more trades then. So better to take more risk, even though it's kind of controversial. If you just focus on only taking quality setups, then just do a normal risk, right? So I like to also just risk a little more or a little less depending on how convicted I am on the setup. Like it still needs to follow my whole system, but sometimes it's just like, oh, I don't really like it. The structure doesn't look that clean. Even though it looks clean, it doesn't look that clean. So I'm taking a little less risk here. Or it looks so clean because we don't only have one crack combo, we have multiple. We go also below true day open, because I only need two session open, but let's say we also go below true day open for the long, and we have some very clean displacement, then maybe I'm gonna take more risk, right? But always this needs to be checked, if you get what I mean. Then my affirmations, this didn't really change, still from the same video, maybe some small changes. This is the first thing that I read before every single session to ingrain what I need to do in my head. And I'm gonna be honest, I don't do this all the time. So usually when I have a bad day, I didn't read my affirmations. So I'm gonna make sure the affirmations are the first thing I do. So every single day, I focus on the quality of my decisions by following my trading system and basing my decisions only on that. I build satisfaction from building good habits. I am an observer of the market and my emotions. I am patient and I only trade dumb clear setups that follow my system. like the market is calling me out. What I mean with this is like, they're actually like, it's so dumb clear, it's so obvious that it's a good trade that it's stupid if you don't take the trade, if you get what I mean. Then I see losses as a natural part of trading if I follow my plan, and I learn from avoidable mistakes. This is a different thing, right? I can still lose, and it can be a mistake. But sometimes I lose, and it's a mistake because I didn't follow my system, and then it's an avoidable mistake, right? But if it's just a loss, following my system, then journal, of course, but don't try to like look for, maybe it's because of that and this and that. No, you have your system. If you try to always find the reason why your setup lost, then trust me guys, it's not gonna work out. Have your system, it failed, after it worked, after you saw a dumb clear setup, go on. But if you didn't follow your system, then it's an avoidable mistake. Now I journal like my life depends on it. Every single day after the session at 12 a.m. or after PM or maybe the next morning, I brain dump every single thing that I've seen that session, that I traded. I break down why I took a trade, why I didn't take a trade, my bias, everything, charts. Lastly, I step away when emotions run high, when market conditions are poor or my concentration fades. This makes sense, right? Some additional notes. I trade with discretion, like I already told you guys multiple times in this video. I don't really trade mechanically. This is kind of mechanically, but also really not. It's not really mechanical. I just need this to be checked. And then I trade with discretion. Sometimes I don't like to trade this, I don't take it. Sometimes it's done clear for me. It's just all about market experience. I can't really explain it. I've been trading for almost 3 years now. Intuition and market experience, just make sure you actually get that final trigger from your head from like, oh, it's actually a good trade. But you first need to check this off. And then we're talking about discretion, right? So yeah. Then everything comes down to AMD that rules the market. Something actually everything refers to. Like, I'm not gonna go over it again, but you guys know what I mean, right? Everything is basically AMD. No, to automate the cracks, because I was trying to do this all myself, have all the trades on my chart and check for SMTs, PSPs, SMT fills, and it kind of distracted me from trading. And now I made a very good indicator with a very experienced trader and PineScript developer, where we basically automated all the cracks. And that's basically what I use right now to have every crack that I use for crack combo, for my bias, on the chart already. I just need to switch to the cycles, check what's there, and then I can just focus on only taking the cracks that make sense to me and the context that makes sense to me. It's not a signal indicator, it's just like for me to save time, because I don't need to look for SMT, for PSPs. Oh, is this a PSP or is this SMT fill? We just completely blurred that out. This guy I'm working with is an absolute legend. He's still working on updates. But yeah, this is crazy, crazy, crazy. We basically have a PSP indicator, sequential SMT indicator, super, super clean, even hidden. You can see it on a higher time frame, lower time frame. We have true opens like this. We have SMT fill, very, very popular because there's nothing like this on the market right now. Yeah, we basically have an entire library. You can just go to quarterlytheoryindicators.com. We're basically trying to make the biggest quarterly theory indicator library, high quality, easy to use, good documentation, good support, because this is something I was missing. And yeah, I made it, I use it every single day. So if you want to try it out, you just go here and then yeah, you'll see. You can try it out right there. Okay, aside that, that's basically it, guys. Yeah, this is a cycle time frame alignment. So on these time frames, I check these SSMTs. It's just a time frame alignment from trader day. And that's also like the alignment that I use then for conforming my sequential SMT. So if I have a monthly sequential SMT, I want an hour 4 displacement inversing an hour 4 bearish gap, or I want an hour 4 clean turtle soup using open, high, low, close. I'm talking about this confirmation, right? And then we have the gap SMT PSP alignment, so that you know if you're using these cracks, what type of time frames they need to be on, right? So yeah, that's basically it, guys. Uploading this on this link right there. You can just go to here. I'll put it in the description as well. And you can download the old system, which is kind of chaotic right now, but it's part of my process. All right, let's now go over a bunch of examples so you guys know exactly how I use this system to find setups on a day-to-day basis. You can find literally every single day, almost every single day, a setup with the system. It just depends on if you only want to take the high probability setups or you also want to take the low probability setups with those high probability ones, which is what I'm doing. I literally want to trade every single day. And yeah, that means that I need to also take trades that are less low probable. I need to take profits quicker, or it doesn't look that damn clear. But if my system checks off, I just personally feel like I'm gonna take a trade because there's a lot of potential and opportunities every single day. So I have a bunch of examples here on my right. I'm gonna show you 10, and my goal here is to not show you the textbook setups that everyone shows you when they're showing their strategy. I really want to show you the raw reality of using the system. So that means I'm going to literally show you the most hardest scenarios, because I want to show you this actually works and I'm using this every single day. So these setups are literally from this week and the past week, and I'm going to show one textbook example at the end, because obviously you also want to see a very high probability setup, but mostly I'm going to focus on literally just past price action, which is not the best, but how you can still find a lot of good setups in price action that is a little bit choppy, not really fast as it used to be like a few months ago or last year. But this is really where you learn. And so you'll see that if you follow this system, you can literally catch so many moves in a week. It is just crazy. You just need to follow this to a T, don't care about losses, and just repeat this consistently. So like, just keep that in mind before I show the examples, that these are really, really hard examples. So this is just because this is where you learn the most from, right? All right, first example. This is the trade that I took this Monday, 8th of September. This is the execution. Basically, let's go from top to bottom using my system. First of all, we have a bullish crack in correlation on the higher time frame, which is this weekly bullish sequential SMT. We have nothing really on the bearish side. This looks like a clean manipulation. We are trying to here go and inverse this gap. We didn't yet inverse it. I want to see this inverse before this weekly is confirmed, but we have nothing on the bearish side. Higher time frame draw looks clean as well. We have a big range SMT right here, which I don't really use, but it's just nice to see, okay, liquidity got taken out, so most likely we're going for the highs now next. So this is what I use to form my bias right here. I have my higher time frame draw, I am bullish, and the biggest confirmed cracks is this weekly right there. And here, this is then my low-hanging fruit, my buy side liquidity, which is kind of far away, so I like to take profits earlier. I'm gonna show you guys what I did here on this trade. So 9:30 is when I start to look for trades. Right here, what do we do on the lower time frame? I am bullish, so I prefer the lower time frame crack combo that I'm looking for here to be like bullish, right? So what do we got here? We get a 90-minute sequential SMT and a micro sequential SMT right at the open. Okay, I got everything I need. This also happens below the true opens. You see right there, this is a smart money reversal. As long as the low of these cracks here happens below, I am here looking for a potential market maker buy model. So this is what happens right here, micro here. If I want this setup to be confirmed, if I want to trade this, I need a 1-minute displacement, right? Because a micro sequential SMT is seen on the 1-minute time frame. I want a synced time frame displacement, so on the cycle time frame of the lower time frame crack, which means if we go here, I want a 1-minute displacement, right? This is cycle time frame alignment. So looking back at this here, where do I see the 1-minute displacement? Right here. Okay, I enter somewhere here after I see this clean 1-minute displacement, also creating a fair value gap. And obviously I don't need an inverse right here because there's nothing on the left, but this looks good to go higher, right? So you can put your limit at the fair value gap, which you'll get tapped, put your stop at the micro sequential SMT, lower time frame crack low, and then just target the highs. Now this is kind of far away, so I'm looking to take profits a little bit more earlier at like a low-hanging fruit, but we don't really have anything to work with here. This is just one clean high that we can target. So in this case, I'm showing you guys literally like the hardest examples. This is not dumb clear. Like, it looks like I'm chasing the market. It's not high probable, but it's still a trade that you can take using this system. So I'm in this trade. We go up, we go up, we go up. Okay, we form a temporary high. We go down. And now here, I'm getting hit at break even. I'm still in the trade. Right here is where I would draw my low-hanging fruit because now I got a high on my left. So whenever we go back here, I just take profits right there. So I took 50% out. Now I have this last buy side liquidity left where I'm gonna take a runner. I put my stop to break even, trim it like towards here. I don't wanna see it go and inverse this again. So just put your stop logically. And then after I see now here a daily 90 and micro forming, I am out, especially after this 1 minute displacement inversing these gaps right there. So this is where we got that micro, I believe, and then I am out right there after that confirmation. But you can also just enter before this displacement if you're anticipating this and you anticipate a retracement like I have on this system right here, right? Close position when retracement is likely to happen. So you expect a retracement after this is hit because also we have this cracks. And yes, you can hold towards this, but it's better to just take profits. It's always good to just take profits because you never know, we might just go back and inverse your position, stop you out at break even. So this is a setup for my system. Why? Let's go over the checklist. 4 reasons why markets move, okay? This is the first step towards forming your bias. How did I use this? Well, I basically saw that, first of all, here on the higher time frame, we take out an important sell-side liquidity low. So yeah, then we most likely look for the highs. This is just basic stuff, right? But this is the first thing I do forming my bias. Here, we are trading right there. What did we do before this? We retrace back to discount of a range. We also tap the gap. So now I'm looking for higher targets, right? Higher time frame draw here. I'm looking for these highs because there's no cracking correlation here. This is just a clean high. I don't expect this to be an invalidation. So now my bias is refined because the biggest confirmed cracks is bullish because of that weekly bullish that you saw. So I am bullish. Now I need to look for a crack combo at the open. We have that 90 plus micro. This is a higher time frame sequential SMT plus a lower time frame sequential SMT. I look for then it to happen, the smart money reversal below true opens, which happens. This is happening, this crack, this manipulation is just happening below true session open and below true day open. And now price and time needs to align. Well, it happens right at 9:30, so it's a good time to trade. Check this off as well. Now confirmation, the displacement is what I like to use the most. So if my low time frame crack is a micro, I need a 1 minute displacement, which happens right there. You enter at the close or you set a limit right there, stop at this low and bam, target higher. Just take profits whenever you feel like to. It's already like a 1 to 2, 3R. Just take profits, especially here when you take out the next low hanging fruit. And then just watch out and monitor your trade if opposing confirmed cracks and context is bigger, or when a retracement is likely to happen. And this is just like a sign we have some opposing cracks, so just get out, right? It doesn't make sense to just go for an extra 15 points, just take profits. That's the biggest thing I learned, just take fucking profits. So that's example number 1. Let's go to example number 2. Now, example number 2 is literally on the same day where you could have taken a continuation trade. So this is the execution of that trade. I took this long towards this high. And the reason why this could be another entry is because it again follows my system. We have another crack combo right here that we can use to trade higher. So we had this initial 90 plus micro here below from example number 1. Okay, we go higher. Now we form a temporary high. We go lower, we rebalance. We form a micro in a 50-minute gap. And guess what? Everything is still like bullish, right? It's still the same bias that I have. I am bullish. But the crack combo now becomes sequential SMT in a gap. And this also aligns with the 4 reasons why markets move. Because again, we form a high and we rebalance to a gap, we rebalance to discount. This is always what the market does, right? So this is why this is just so important. This is how the markets move. But we do this, we rebalance back to equilibrium in efficiency. We can just go higher and just only take this long that I had previously. But if there's another opportunity to take a trade, if there's other cracks, I can have a new invalidation and a new setup. You get what I mean? So this is a micro sequential SMT in a 15-minute gap. What do I need to wait for? Then a confirmation, right? Also, before I go to the confirmation, the smart money reversal, it doesn't matter that this now is not below true opens. You might say like, oh, it's now above true opens, it's not valid anymore. Well, the smart money reversal already happened below true opens. Like it doesn't need to come back here. There's already some cracks. This is just another re-entry. So I take this as a new invalidation. So that doesn't really matter as long as the first setup already did so, right? So after that, I wait for confirmation, which is most likely a displacement on the 1 minute because I have this micro. So after then, we have this displacement inversing this gap, right? I enter. If you want to be more sure, wait for this, which actually creates a fair value gap. This is, I think, where I entered, and then you take profits right there. And also same story as the first example. You just take profits when you see these opposing cracks getting formed, like daily 90 micro. You see here, if you put the indicator on, we have this 90 now. We have the daily. I think there was a daily as well. Yes, a daily, and then also like a micro I think right here as well. So this is an ideal time to like take off the trade, right? Especially after this 1 minute displacement, which means that this setup is confirmed to go lower. You can even take a short here, but obviously I don't recommend that because it's against the bias and already it's 11 a.m. so it's not the best time to trade. So that is example number 2. Let's go to example number 3. All right, this is another very hard example of this Tuesday, 9th of September. I took a short, but I also took a long and I got stopped out at break even, I think. And I just want to show you guys, this is literally where you learn this stuff. Like it's the hard examples, the harsh market that we are in right now, where you can still find setups using this system. So let's go and look at this price action of this Tuesday, 9th of September. This is 9:30 open. What do we have here on the higher time frame at first? We are bullish. Why? Because again, we swept this low. We have this weekly bullish. Now we actually have this weekly bullish confirmed, in my opinion, because we inverse this hour one gap completely. You can also see it confirmed if it's like a clean turtle soup, if you follow my plan. But to be extra safe, I wanted to inverse always like an opposing gap on that time frame of the SSMT. Then I'm the most convicted that this is actually confirmed. So I'm really bullish. I'm looking at these all-time highs. There's nothing really on the bearish side. So at the open right here on Tuesday, this Tuesday, I was pretty bullish. We also had this, if you go on the 50-minute, this hidden daily sequential SMT. I look to trade higher. This is where we then inverse this gap. We go lower. We form this micro now. So I was taking longs right here. Let me go to the 1 minute time frame here. Let's see. This is where we open the market. Where do you open the market? Right there. We opened the market right there. Before that, we had a micro plus daily, but look how not really clean this looks. And I was trying to force a long right here because I just thought like, oh, this is nice daily, this is nice micro. Now I have a crack combo. This looks nice highs to target, and then eventually we target this buy side liquidity, which is a really clean high. And so before the open, I think I took a long right here after I saw this displacement, but it didn't look damn clear, right? This is like a very far away crack combo. Usually what you want to see on a nice crack combo is something like this. Let me draw it out for you guys. This is like the ideal higher time frame plus lower time frame sequential SMT combo that you can get. Something like this. This is really what I want to look for every single day. We got a higher time frame sequential SMT, and then at the same time we also formed a lower time frame, right? So this is like kind of far away. It doesn't really look clean. It doesn't have to. Like you can also do something like this. Trade this, where then you have a higher time frame like this and then like this. It doesn't happen at the same time, but it's still valid to higher time frame plus lower time frame sequential SMT. But this looks a little bit off, right? We have this daily. We are bullish on the higher time frame. Yes, I'm looking for longs, but we might just want to retrace, right? Always keep in mind the market moves to hunt liquidity, rebalance to equilibrium, and rebalance to inefficiency. So might have a day like this where we retrace back to equilibrium, which is what we're doing right now. And so that's why this long was not good. Maybe, yes, you could have taken this daily plus micro then after this 1 minute displacement, take a long towards right here, this clean low resistance liquidity. But then after you see at the open, we kind of just reject from this liquidity pool. And most importantly, look what we get now, which is the reason why then shorts now look good. Look at this. We get a 90-minute bearish sequential SMT and a micro here after we take out this low-hanging fruit. So let me delete this low-hanging fruit. The longs are now invalid and the bearish context now makes most sense. We have a 90 plus micro at 9:30. So what do we have here? We check a lot of things off. 4 reasons why markets move. Hunt liquidity. Yes, we just took out low resistance liquidity. We might run a rebalance to equilibrium on the higher time frame, to inefficiencies. And this was just generation of liquidity. So, okay, check. Now the higher time frame draw is bullish, but we might just want to go to lower time frame draw here, fill the gaps here in discount, all the sell side light here, before we actually go to the higher time frame draw. And we just took out lower time frame draw here. So yes, the biggest confirmed cracks are bearish, but remember right here, we can trade against the biggest confirmed cracks if there's clear context and a cracks combo. And that's exactly what we have here. We have clear context that we can go lower. We reject from here. The bullish tracks are ugly. The 90 plus micro looks clean. This happens right at 9:30, so time and price aligns. It also happens above the true opens. Look at this. So now I wait for a confirmation. Mostly I'm trading like a micro sequential SMT. So then I need to use like a 1 minute bearish displacement here in case of a short setup. So I'm looking for a bullish gap that can get inverted, which is right here. We have a tiny gap. If you want to be more sure, you can use this gap. But I entered right here after we have this displacement. And then, yeah, you can trade it lower right here. We have not the best market condition. So if you have your stop right here, you're most of the times good. So we can have these steep ass retracements like you see right there. But you just gotta trust your stop, man. You just gotta trust your stop. The setup here then looks something like this. And then you can trade it lower towards all these sell side targets in discount of this higher time frame range, right? But I was too greedy on this day. I really wanted to see this low getting taken out right here, but it literally missed by a tick. We didn't get any weekly bullish sequential SMT. And I just thought, oh, this low is next because there's no cracks in correlation, so we might as well just retrace and just take it out. But it went all the way back to break even. So this is a mistake I want to avoid. If you're in a trade, just take profits, man. Take profits. This low, this low, this low. You don't need this previous day low to get hit before the market can actually reverse back, because still, this is a trade against the biggest confirmed cracks, right? We have this weekly bullish. So yes, it can form another weekly bullish, but it doesn't have to. We already have the higher time frame crack. So we might just rebalance to discount right here. And the only thing that might push us up is just this hour 1 and 50-minute PSP. Now, it's not a long setup because it's not a clear crack combo, but it doesn't matter, right? Then it's no trade. I should have just already taken profits way earlier, but instead I wanted to wait for this low because we were so close. But the reality is the market, it doesn't care about you. So obviously should have taken profits already at previous PM session lows and these lows right here. But yeah, I was too greedy. I wanted to see this low getting hit because it was a clean market maker sell model to internal range liquidity, but that didn't happen. So yeah, if I just take profits earlier, would have been a really nice trade. This is not the best price section, but obviously you see this long was not the best. After we take out this liquidity, then the bearish context makes most sense, right? If you go over my plan, you see that everything basically is in line with this short, right? We want to rebalance back to equilibrium, which is why I'm trading against the direction of the biggest confirmed cracks. We have a crack combo. It looks clean. It's above true session open. Time and price aligns because it's at 9:30. We have a displacement on the 1 minute. It looks damn clear to go lower. We have a market entry, bam, and we monitor the trade. I want to take profits as soon as a retracement is likely to happen. So I should have really taken profits after I see this 50-minute PSP or just after we take all these lows out, because this is a really big move. And so you want to just take fucking profits, right? So that's that. Let's go to example number 4. It was the 10th of September. This was also a break-even trade because I didn't close at the time that I was supposed to. But let me break it down. So these are really hard market conditions, and I'm going to show you like a textbook setup at the end, but this is like what you have to deal with now every single day, right? So still on the higher time frame, sell side taken out. Let me turn off this. Sell side taken out. Weekly bullish, still confirmed. I am bullish on the higher time frame. These all-time highs for NQ, they look clean to take out. So this is my buy side liquidity on the higher time frame. Then on the lower time frame, I'm looking for a bullish crack combo now because the biggest confirmed cracks are bullish for me. Now, this is where PPI was. We pumped up right there. Before PPI, we had a daily bullish sequential SMT. Okay, nice. Now, after this PPI, we have a weekly bearish. Okay, what am I looking at? I want it to be dumb clear for me to take a setup, right? So here at the market open, what do? This is where the market opens, 9:30. We drop off really hard towards this data low. Remember, data low, really nice liquidity. So it makes sense that we go there, but there's no setup right here. This 90 here, don't mind it because it only got confirmed right here, but it's because the highest high was still here that I draw it out like this. So there's nothing dumb clear yet. I am bullish on the higher time frame though, but now here we chop around and now we have a crack combo that we can use to trade higher, right? We take out liquidity as well. We rebalance to discount of this whole range. I am looking for longs. So we have this crack combo here, nice turtle soup. We inverse then this 1 minute gap. I enter right here at this 9:53 candle close. Stop right here, and I got teased. I got teased a lot. Look at this. This is really why you want to put your stop always at the lower time frame crack. So this is then the setup. I want to trade it higher. I wanted it to reach towards this data high and eventually this buy side liquidity, which is your close, clean, higher time frame draw I'm talking about here. We go up, okay, profit. A lot of people took this long, but now look what happens here. ES already takes out these highs right there. We form a 90-minute sequential SMT, hidden one, and now a micro one in a 50-minute gap. So now we have a higher time frame sequential SMT plus a lower time frame sequential SMT, right? But we also have an SMT in a gap because this micro is, let me delete this, in a 50-minute gap. Right here, okay? So although I am bullish on the higher time frame draw looks nice, biggest confirmed cracks are bullish, this doesn't look clean anymore. Obviously, this long, you could have just take profits here, obviously. But I mean, after this, you need to monitor the trade and see, oh, now actually NQ looks really, really weak. We have a 90 plus micro and a weekly and a micro and 50-minute gap. You might want to take profits here. So after I see this micro, you can take profits for this long. That's already a really nice risk to reward, I think. Let me check. Yeah, I mean, it's not the best, but you just need to make sure that you take profits at the right time, right? I don't care about risk to reward. I care about conviction. If this is a good setup, I take it because the win rate for me is way more important than having a big risk to reward, right? But anyways, after you see this gap getting respected, we have opposing bearish cracks. And the 90 plus micro opposes basically this 90 plus micro. So now it doesn't look dumb clear anymore, especially after then we inverse a gap. So this looks like chop, 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 chop. We can still go higher from here. You can neglect this. But after we then have this displacement lower, especially we inverse this, then yeah, we can look for lower prices, right? So that's where I entered then. I think right here, after a clean inversion of some fair value gap I found here, I don't really remember where. I think it was this one. You can use CISD, whatever. I just really like to use for inverse fair value gap. So after this, it looks dumb clear that we confirm this 90 a micro and we go lower. You can already take profits earlier if you anticipate this, especially if you're anticipating retracement, right? But here, it's both a retracement, but after we confirm this, then it's actually opposing confirmed cracks and context is bigger. You know what I mean? So you can trade it lower. You can now use them. This is also 50-minute PSP to use as liquidity. And we just go lower, right? This is nice lowest liquidity that you can target them. And this is basically then how you could have navigated a really hard day, in my opinion, where we essentially not are in line with the biggest confirmed cracks, but we just want to rebalance to inefficiencies, to equilibrium, take out some sell-side liquidity. We have lower time frame draw, which is then this 90 plus micro because it gets opposed by this 90 plus micro on the bearish side. So then you can use this as your lower time frame draw. Your close, clean, higher time frame draw is then these lows right here, nice lowest liquidity. You take profits right there. Then we have a crack combo, which is 90 plus micro and micro in 50-minute gap. Time and price aligns. Why does price and time align? Because everything just looks clean, right? If this micro happened right here in this ugly consolidation, it wouldn't have looked clean to go lower, right? But here, it actually happens in premium of this gap. We have a 90 plus micro. The structure just looks clean to reject from this gap, form a manipulation, and go lower from there, right? It's also above the true open, so favorable for shorts. And notice the longs was below true open, so you can literally trade like multiple trades every single day. Now, there are low probable, but I mean, I'm just such a perfectionist. I want to catch literally every single thing. And I want to show you guys it's actually possible, but you need to like be hyper focused and constantly monitor the cracks and context and see what side makes more sense. Here we look for longs, but now shorts look better and bam, you can trade lower. So constantly monitor the cracks to see if opposing confirmed cracks and context is bigger. I still use this to basically look for the strength and just a comparison between the assets, right? Because yes, it draws out the SMTs for you. Like if I go back to right here, price action right there, you'll see that the indicator here, it will show out this micro here that I drew out, and then this 90-minute bullish that we have right here. But make sure that you still have your chart layout so you can still see like how strong or weak the assets are compared to each other. Because remember, they help each other out, right? These assets, let me go here, support each other. If one asset does something, you don't need to see the other assets do the same. Okay, let's go to example number 5. Now this is an example of literally yesterday. This is a trade that I took. I also took a stupid short right here, and I'm going to show you exactly why this was not following my system and why I hopped in too early right there. So let me show you guys the analysis behind this trade. Still here, I am bullish on the higher time frame because order flow just looks bullish. We sweep the sell side on the higher time frame, weekly bullish, biggest confirmed cracks are bullish. Now here at CPI this Thursday, 11th of September. We form a daily sequential SMT. And whenever we have news where we create a sequential SMT, then I just deem it as higher probable because news can either distribute or manipulate price. In this case, there was not really any crack here, so we manipulated right here, and we now have a weekly plus a daily. Now you can already like take a trade here and put your TP right there, but I'm not really a 50-minute trader because you essentially already have a higher time frame sequential SMT plus a lower time frame one, which is pretty clean. Happens in discount, it looks dumb clear, but I just always want to be a little bit more precise and go look for entries on the lower time frame. So I wait here for the market to open. What do? We get another micro sequential SMT right there. I see a little bullish candle and I enter. Stupid decision, right? There's no clear displacement yet and not dim clear. We haven't really retraced to discount. It doesn't look like the market maker model looks ready. Whereas we now dump off after we chop a little bit off 930. Right here, now we enter in discount, tap some lower time frame gaps, I believe. Now we have a micro hidden. It doesn't matter, right? I use sequential SMT on the normal side or hidden sequential SMT. It's the same stuff for me, although I prefer the normal sequential SMTs because we actually take out liquidity. But aside that, now we rebalance to discount. Check. We have higher time frame draw and lower time frame draw, which is bullish because the biggest confirmed cracks are bullish. So I'm looking at the highs, I'm looking at this target, and I'm looking at this clean, let me see here, this clean high here where there's no bearish sequential SMT, there's no invalidation. It doesn't make sense that we like use this as a protected high. And then we also have the all-time highs that we can use as like close, clean, higher time frame draw. Now, look at this. After this, what do I need to look for? Now we have a daily plus micro, and this is a valid two-stage, right? Because we have a daily, we displace up, retrace, micro. Now we have two-stage sequential SMT. I wait for a 1 minute displacement, very, very clean. Like, look at the difference, guys. This was a stupid long because not them clear, the structure doesn't look ready, whereas here, rebalance to discount, now we look ready, right? And we even get a super clean 1 minute displacement inversing this 1 minute bearish gap. If you want to be more sure, you can even wait for an SMT fill. We even got that right there. Put on this SMT fill indicator. You will see that right there, SMT fill happened, a displacement from it, and you can use it even as a new invalidation. Whereas I recommend like still using the sequential SMT, but you can still be cheeky and use this, and then we can trade higher. All right, very, very slow day as you see. Like look at this, we go up, sweep the high again, and we go lower, up, barely sweep the high again, go lower. Like we always need to retrace to discount, but normally we just fucking pump to the highs. But the system still played out, right? It aligns with wider markets move. We rebalance back to equilibrium, to inefficiencies. We generate liquidity. We take buy side as our higher time frame draw because the biggest confirmed cracks are bullish. I have a higher time frame sequential SMT plus a lower time frame sequential SMT, and this happens below tropens. This clear sweep making this daily at news happens below tropens. Check. And time and price aligns in relation to the model because now this is your small market maker model that you're trading. It aligns because we just rebalanced to discount. We have a cleared sweep of this, lowers its liquidity right here a little bit. Everything just aligns, right? It looks dumb clear. We have the confirmation, which is this 1 minute. Even an SMT fill, extra confirmation, low-hanging fruit there, and then you can trade it towards this low-hanging fruit right there, which is previous day's high. No bearish crack, so I keep being in the trade. This here also keep in mind, like if we take out the high, what happens? Right here, we just have a small micro. This means that we can just retrace, but still the daily micro is the biggest confirmed cracks, and context also still points bullish, so I'm still keep being in the trade, right? Also here, yes, this all-time highs are really, really close, but the reason why I just take it out right there is because I don't want to risk price going and taking out previous day high, and then we retrace what we do here, we chop around. If we already have a big risk to reward, I don't need a TP2. It's mostly I need a TP2 if I like, if my low-hanging fruit is pretty close to my entry and I want to let it run farther. Make sense? Okay, let's go. Example number 6. So now we kind of covered this week's price action. Let's go then back to last week. This was the 4th of September. I took a long, let me see here at 424. What happens right here? Okay, still I'm bullish, swap sell side, going for buy side most likely. We have this weekly, yes, bearish, and also I think a monthly right here on the high. So the biggest confirmed cracks are essentially bearish. So why am I still bullish here and taking longs? Well, because at the open right here, we are not having any bearish lower time frame cracks or any context that we might want to go lower. So the context and cracks that are present in your session can maybe just conflict with your bias, and that's okay. You just need to keep in mind, it's better if you trade in line with the biggest confirmed cracks, right? But we can easily just follow this higher time frame order flow that's been set in place after we swept the sell side. Even though there's no higher time frame SSMT here, like a monthly, which would have been ideal, but hey, you just need to play with what you get, right, from the market. Also, this is not like a very, very clean weekly bearish, so it's pretty ugly, so you can also see it as lower probable. And you can think like, oh, we just took out sell side, so we might now go for buy side. This looks ready. We just tap discount of the higher time frame range, swap some liquidity. Okay, I am bullish. Here at the open, we take out buy side immediately with this nice low resist liquidity, which is not ideal because now I can't really use this liquidity anymore. This is now my new low-hanging fruit. This would have been better, but now this is just a clean high and there's no crack in correlation right here. So I'm using this as a clean high to target and I don't see this as an invalidation. I use this as a future buy side. So here now, what do? We go below the true opens and again, we form a crack combo, a daily plus a 90-minute sequential SMT. Also keep in mind that, I think I didn't write it right here. Oh yeah, for all these combos, you can skip one cycle max. So if I have a daily, the lowest I can go is a micro. You get what I mean? So daily 90 is even higher probable than daily micro. Now the lower time frame crack is a 90-minute sequential SMT. So if I go back to the alignment, then I need a 5-minute displacement, right? Because the displacement here needs to be on the cycle time frame of the lower time frame crack. Okay, this looks like a very clean 5-minute bullish displacement. This looks now perfectly ready. We sweep liquidity in discount. We are bullish because there's nothing bearish. All the context points bullish. We do this below true opens. Now we inverse this 5-minute gap. Okay, I market enter right there at the close of this candle. Low-hanging fruit right there. And then you can let it run all the way, which is a little bit too greedy, all the way towards maybe this clean high. I don't really like it, but maybe you can trade it aggressively like I have it in my plan. But I think I just took profits right there immediately. Stop at this lower time frame crack. So if you have a hidden, obviously you don't want it to be at the body close. You still take it at the lows. So that would have looked something like this. Now, putting the stop at like the lower time frame crack low is like the most safest, but sometimes it fucks up your RR. I'm gonna be honest. So if you want to be cheeky, you can use like closer, tighter stops at like lows of fair value gaps or where you think that the market might not want to retrace. But just know that whenever you do this, it's not really an invalidation and you can still have like very bad price action days where we just like chop around, not take out the low and then go higher, right? Just keep that in mind. That's why I always want to be sure and put the stop at the crack low. But yeah, very nice trade. It follows with everything because we have higher time frame bullish draw. It makes sense with the reasons why markets move. We have our biggest confirmed cracks, which are not bullish, but I can trade against that if it makes sense context-wise. And why does it make sense context-wise? Because we tap below true opens, we have a crack combo, the draw looks good to go higher, and the reasons why markets move also indicate that, oh, this looks like we want to go higher, we sweep this liquidity, we tap discount, right? Everything here just makes sense that we want to go higher. So let's now go to example number 7 and 8. So again, this is a very hard example. You can take short and then immediately watch out because there's a long opportunity and you need to get out of your short. So yeah, sorry guys, I'm making it so complicated, but I hope you see that how crazy the system actually is if you follow it to a T. So again here, sell side got taken out, higher time frame looks bullish, we inverse this gap. Yes, the biggest confirmed cracks are bearish because we have this monthly bearish, we have this weekly here, we form another weekly later. But if it makes sense context-wise to still look for longs at the open here, then I'm gonna do so. So initially, I need to be bearish because the biggest confirmed cracks, monthly bearish, weekly bearish, it's just a little bit ugly that we already took out sell side, so we might just want to retrace higher and then go lower. But I need to go into the market this day with my bias being bearish, okay? And just see whatever makes most sense, and I can still take longs in, if that makes sense to the next session. But so I go into the market in that day. It was last week, Wednesday. We got a 90-minute bearish sequential SMT. And this is happening in an hour 1 gap on ES. So this is why I mean like you need to see ES compare it to YM, compare it to NQ. If ES steps in the gap, then you can already see NQ already did so, like they just balance each other off, right? So we have now a 90-minute sequential SMT in an hour one gap. This is my sequential SMT in a gap combo. Now the reason why I see this as future draw is because later you'll see that we form actually a bullish setup, which I'm going to show you. And so this correct combo, this short, which you could have taken, is just for price to rebalance, make ready to make a market maker buy model and look for longs. So you can literally trade internal range to external range activity, like take a short and a long in a day using this system, but you got to be very, very careful and always monitor the trade. So the reasons why markets move, it makes sense here to take an initial short, because we are just tapping this gap here on the yes. We have a 90-minute sequential SMT. The biggest confirmed cracks are bearish, lower time frame draw, clean lows right here, lows is liquidity, equal lows right here. Here we do this above the true session open as well, check. And we have this happening just before the 9:30 open right there. So time and price aligns as well. The market maker model looks ready to go lower. We had the manipulation, we have engineered liquidity, everything looks nice. The structure looks ready, especially after then we have this 5-minute displacement, inversing this gap right here. And then you can enter short right there and take profits here at low hanging fruit, and then here at this 50-minute bullish fair value gap. Why not lower? Because this is too greedy. This is way too greedy. This might look like nice lowest liquidity, but if you're already in a trade right there, just take profits there. It's already a really nice target. And especially why you need to get out here is because now look at what we get. We get a bullish setup. We see that after we tap this, perfect TP by the way, if you're still bullish, like just take profits at like discounted gaps. That's always the best thing to do. Never be too greedy. And now we can delete this 90 bearish because now we get bigger bullish cracks. We get a daily and a micro because YM went all the way back below true day open, sweeping previous session lows. And looking at the open, high, low, close candles on the 5-minute here, 5 and 50-minute are really good time frames to look for, like how price is reacting off levels, if you want to go lower or higher. And look at this, we constantly keep rejecting. So especially because we have this daily now, you need to be out. You could have taken the short towards low hanging fruit, towards some gaps here, but here you really need to get out because first of all, a retracement is most likely to happen because of this daily. But most importantly, we maybe get this opposing confirmed cracks and the context is way bigger. Why? Because we tap the gaps, we respect it. We are now below true opens. We have 10 a.m. news that's coming that can potentially distribute price higher again because now we have bullish cracks. And this 90 bearish also wasn't that clean, right? Because we didn't even take out this external range high. And now this looks like it just is generating liquidity. That's why I wrote down right there, it's gonna be future draw, right? SMTs are nice liquidity pools if the opposing cracks and context are opposing that. So now the price action is still not the best. Like we literally just went up from this daily, already took out this draw. No bullish setup here until then we retrace and now have a micro bullish. Now we have a daily plus micro in discount below true opens. 10 a.m. news, this candle here, displays price higher because we already had the crack in place. The draw is higher. This previous day's high looks ready to get taken out. After the micro, I need a 1-minute displacement, which you get right here. We inverse this gap. We can use this as a BPR, as an entry. I just prefer to market enter right away. I don't want to get left out, but yeah, you can enter in this gap, put your stop at the micro section low. And then here, importantly, where do you need to take profits? As soon as we now get this previous day high here, is a really nice take profit target, especially because when we were taking that out, it didn't got taken out on the S. So now we have a weekly bearish. And now again, it flips again. Now the weekly opposes this, right? It's not yet confirmed, but it's better to just take profits here because we can easily react from this weekly then and go lower, which is what we exactly did, right? So a very, very hard day to navigate because you constantly need to watch out what happens. But at the open here, you could have taken shorts from this 90 in hour one gap. Then we take out this liquidity. We are in discount. Now we can take longs because of this combo crack, daily plus micro. Now take out the long after we have this weekly bearish, right? It's okay if this is like too much, but I like this stuff. It's a puzzle for me. It's a puzzle I need to solve every single day. You can only focus on the high probability setups that I'm going to show you later. The last example is a really nice setup, but I'm just going to show you like this is the relative trading. Like this is like you don't need to take this short, but you can, right? This daily plus micro looks way cleaner to go higher and then take profits at previous day high at time-based liquidity pools, right? I'm rambling so much, but I'm literally just spitting out all my thoughts. Sorry if it's going too fast, but this is just, I love this shit. It's amazing. So yeah, if you go over the system, I'm not gonna go over and over again, but you will see that this is always present, right? This is the base from every setup. Always need to keep in mind how markets move. Define your higher time frame, low time frame draw. And sometimes it's not that clean. It's not that clean. It's not a clean market make model. It's not clean draw, but you still can take trades because you keep in mind the context. You have a crack combo. This aligns. This aligns. We have a confirmation. It looks dumb clear. I just hope that you guys see how I use the system in action, right? Now, last examples. Example number 9. This is a short that I took here on the 2nd of September. Let me take a sip. Took it at 14.39. I took an entry right here at 10.39, but then I also scaled in right here after we have this inversion, which should have been the ideal entry, right? But the reason why I also entered right there is because we have 2 combo cracks right here. A very high probability setup in my opinion. Why? First of all, it follows and it is in line with the biggest confirmed cracks, which are bearish. We have this monthly and weekly. Let me now go towards this day then. Replay until this day ends, right there. And look at what happened. I need to take shorts, focus on taking shorts, because the biggest confirmed cracks are bearish. We now rebalance to premium of this range. Check. I'm already using one of these reasons to form my bias. I'm looking for a rejection here for some manipulation in the form of cracks to then trade lower. Now, the stupid thing is here that we already took out an important sell side target, which is not ideal, but I can still use this as a clean low because there's no cracking correlation. There's no reason as to why this should be protected because I want it to be like a sequential SMT or a PSP. So here we open, we take out liquidity, we go higher. Now I'm looking still for shorts because there's no reason for this to be an invalidation. I get a 90-minute sequential SMT in an hour 1 gap, and we even get an hour 1 SMT fill because we don't tap this gap on ES. And we have a 5-minute PSP. So now what do we have? A lot of cool setups, so high probability shorts from here. First of all, we have a sequential SMT plus a PSP. 90-minute plus 5-minute PSP. Remember, it needs to be synced, right? So if you have a 90-minute sequential SMT, the PSP needs to be 5 minutes. And also the displacement, if you have a confirmation, needs to be 5 minutes. Okay, got it? So now we also have a SMT in a gap because we have a 90-minute in an hour 1 gap. And if you see here, if you have a 90-minute sequential SMT, you need a 1 hour gap. Check. But also, this is an SMT fill. So this is even better. We have an SMT in a gap and the gap is an SMT fill. So it's even more high probable, right? The biggest confirmed cracks here, they point bearish because of that monthly, weekly bearish and then the hour 1 bearish SMT fill. I am looking for shorts, especially because the smart money reversal here is also happening above the true session open, right? This is happening above the true session open. And this 90-minute was even happening at news. This was 10 a.m. news. So everything that happens at news, like this crack, is now very high probable to me. Now, because this is a clean open, high, low close, a very clean turtle soup, I can already enter using this method. This is the first time I'm actually showing you guys this. Normally I use this. I'm more confident if we get a displacement, creating an inverse fair value gap. But this is an example where you can already enter earlier, like have a very big risk to reward because it just looks dumb clear, right? It's a lot of reasons why we can move lower from here. So you can enter right at the candle close right here, put your stop right there, and then put your TP at your low hanging fruit. Very nice setup. But if you want to wait for the displacement, creating an inverse fair value gap, you want to see a 5-minute then because it's a 90-minute sequential SMT, 5-minute inversion, then you can enter right there once we inverse it, like on the way. You can anticipate already that this is going to close lower, but it's better to wait for this. Then it's a worse risk to reward. You can trim your stop, but just know that this is not an invalidation then. I think in this case, I entered already here because I missed this and it's still valid if you put your stop right there. This is your invalidation. There's a lot of nuance here, right? But you see, in essence, I followed this system and it's the most important thing. Everything aligns here. This is a 5-minute entry because the lower time frame crack is a 90-minute sequential SMT. Okay, my camera is about to die here and I'm almost out of breath, but I want to show you the last example, which is very, very high probable one. This is just, in my opinion, beautiful. Like when I look at this, it's just like, oh, I love this. I love trading. Sorry for me being too enthusiastic, but yeah, it is what it is. Let me show you guys the setup here. That's just beautiful. There's got to be some A+ setups as well, right? So this is the 23rd of June. And this is the reason why this looks so dumb clear. Let me draw this out better. We have the biggest confirmed cracks, which are bullish, monthly bullish SSMT. We inverse on the 4-hour this this weird gap right here. I mean, this order flow starts to look bullish, so I am looking at the highs. This monthly for me is confirmed. Now here, at this day, look at this. I'm already looking at the open right here to go towards the highs, because looking at this, it just looks so dumb clear, guys. Look at this low resist liquidity that we can use as our buy side liquidity. Look at this nice accumulation, which I'm talking about. If you have a market maker buy model, this is basically the accumulation, right? I'm now waiting for a manipulation and then the distribution. And look how clean this just looks. This is what I call a nice market maker buy model. We have the manipulation right there. Right at the manipulation, we have a 90-minute sequential SMT at 9:30 at the right time. So 9:30 manipulated here inside the hour 1 gap. Now we have a 90 in the hour 1 gap combo. Your low-hanging fruit is gonna be here, and then your final target is right there. So you could have had multiple entries right there. You could have waited for like a displacement, but that would have really been nice. Look at this, bad RR. Yeah, maybe you can do it. This is another example of a clean turtle soup entry, because look at this. This is the previous 90-minute quarter low, and we sweep it really, really close. This is literally what I mean with a clean turtle soup using open, high, low, close. If I see this, yes, it's essentially not confirmed. There's no displacement yet, but this is just a way to get in and anticipate this really early if it looks dumb clear, which to me, it does. Every context, every cracks, it just makes sense that we go higher from here. So at the sweep close, I market enter right there, put my stop here. I'm constantly backtesting this, and this is just so clean. And this is the level that I want to reach if I constantly keep following the system and get more conviction in this. This happens below transaction open, in a gap, everything aligns. The reasons why markets move, we rebalance to discount. The biggest confirmed cracks are bullish. Higher time frame draw looks clean here, low hanging fruit. This is your higher time frame close clean draw because it's not greedy. You can easily take profits here. Even another entry here, I believe, let me go back and replay here, that we also had a micro, let me check. Right, we also have a micro sequential SMT. So this 90 here, micro, now we have another crack combo, higher time frame sequential SMT plus lower time frame sequential SMT. So now we need a 1-minute displacement, you wait for this to get inversed, and bam, you enter then right there, put your stop here, and that's also a potential trade that you could have taken. But this looks just really clean for a turtle soup entry and gets you really crazy risk to reward. And in my opinion, you can only do this if it looks dumb clear. And in my opinion, right here, it looks dumb clear. Why? Gonna go over it one more time. First of all, reasons why markets move. It looks bullish. Why? We just took out liquidity, we tapped discount, it looks ready to manipulate. Here, we engineered liquidity, right here, that we can take out and use as target. Higher time frame draw, therefore, is bullish. Why? Because the biggest confirmed cracks are bullish. We have this hour 4 monthly that is confirmed because we have an hour 4 displacement and also actually a clean turtle soup, which we can use for also confirming this. But I also want to wait for displacement, as you guys know. We have the crack combo, which is that 90-minute in the hour 1 gap. And we also have a micro here, so essentially a 90 plus micro as well. We wait for the confirmation. You can wait for the 5-minute displacement. This looks clear that we want to go higher, but this is a clean turtle soup entry. If you want to wait and use the micro, then you can enter right there. It happens below transaction open, right at 9:30 here. We manipulate, so I deem this as higher probable. And yeah, most importantly, the structure just looks ready, right? Look at this. If this would have happened, this 90 right here, for example, in this zone, then it would have looked ready. The reason why it looks ready right there is because it happens in discount. It sweeps this low in a gap. The structure looks clean. We have a lot of time already making and engineering this liquidity. It looks like a clean sell side of the curve. And now we're ready right at market open when everything is high probable. We tap below true opens to go higher. Let's go. This really helps me to ingrain my system in my head. And I hope you guys see how powerful this is if you combine quantity theory with ICT and think logically. Now it's just up to us to manage our risk and only follow our system. Now from here, I'm going to keep posting trade reflections wherever on Twitter, Instagram, on YouTube. And I'll be using this system exactly. So you can always refer to this video to know how I actually trade. Basically, if I can summarize my system in one sentence, is I look for the biggest confirmed cracks and context. And with those two, the cracks and context, they form my bias. And for an entry, I need 2 combos. sorry, one combo of 2 cracks. So that's basically how I trade. And it feels amazing because it makes sense to me. Like, I don't believe in order blocks, in CISD, in some other stuff. I believe in this, and that's the thing that you need to focus on. If you don't understand or you don't like or it doesn't make sense to you, my trading system, then don't trade it because you don't have conviction, and conviction is everything. You need to believe in your system. And right now I do because I know and I see every single day this shit works. The focus for every trader should be to execute your plan, and if you lose, you don't care at all. You just know that small consistent wins by following your system, not being greedy, is the way to go. That's it. That's fucking it. I just need to be patient for my setups, a very big thing. I'm not really patient yet. And the setup needs to be dumb clear. These two basically go hand in hand. If you're patient, then you wait for the dumb clear setups, right? You don't go in knowing that it's probably not ready yet to take a trade. Those things are like the last click to profitability. And I don't really like talking about like, oh, it clicks, because it never really clicks. You just progress more and more and more, because it already clicked like last year for me, maybe even 2 years ago. But like, you still become better every single year, like every single day, every single week, every single month, right? So yeah, it's just a process, man. It's just a process. A process, and we need to trust the process, as cliche as it may sound, again. No self-sabotage anymore, no degenerate decisions. Focus on treating every single session as a business, like literally. Sometimes I'm just going on the charts and I'm like, oh, let's see, this follow my system? Yes, let's trade. Like, but I'm not really like treating this as like actually my job, right? Because I want it to be my job. So then I need to act like it is already my job, but sometimes I'm just playing around, right? I'm in a call with someone when I'm still in a trade, I'm just laughing. I'm like, oh, let's hit this TP. Like, that's newbie stuff. Like, I'm so far in this stuff, I can't act like that. I really need to treat this as a business. And the main reason is because I have so many things going on in my life, and I don't know, it's just interfering with my trading. But it's not an excuse. I just need to lock it in. I know I make a lot of videos about, oh, I make a degenerate decision again. Oh, I fucked up again. Yeah, it's the reality of trading, guys. 99% of traders, they are like this, but they only start content when they actually made it. And I'm so stupid that I started content the moment I saw what a candle was. And maybe it's good because I actually can document my journey and look back on this, and I'm gonna be like, whoa, I really kept moving forward, right? I hope future me watching this is gonna be proud of me recording my journey. And it also helps people out that are in the same boat as me, because I know a lot of people are. That's it, guys. Hope you guys enjoyed this video. I'll see you guys in the next one.